Markets are going to find a way. Markets are going to find a way. That was the
smart money will find a way. Dumb money will find bags. They'll go to the mall and find bags, but smart money will just not listen and get caught up in the bullshit.
Stucktoberfest is back this October 20th to 22nd with an intimate event for executives, influencers, and the most active investors in financial markets. Network with industry thought leaders, including Michael Batnick, Brian Shannon, Michael Parekh, and many more during the two-day event. Early bird pricing is still available for a limited time, so be sure to find the link in the episode description, and we'll see you in beautiful Coronado, California.
Welcome, everybody. Trends with Friends. We lost somebody. Phil disappeared, slacking. So we have no moderator. So we're going to rely heavily today on now a regular guest, Michael Parekh, and of course, JC with the salmon colored shirt. What brought this on?
It's summer. I got a nice tan going. I live in the Northeast, so I don't always have a tan. I might be Cuban and everything, but I got to get some sun sometimes. So, you got to rock it when you got it, right? Mr. Parekh and Howard got better tans than me all year round. So
I got a little sunburn. I've got a little bit of a cycling burn. For the first time ever, I've ridden without sleeves, but I'm very excited about Tour de France. It's already been, the 3 days in, and they've already done like 700-800 kilometers, which is just mind bending. The first day of Tour de France, JC, is like context matters with everything here, and I ride a lot, and I'm at. And Lance also has a show that he does with George Hincapie, which is a little too technical for me, but like I learn little tidbits because I've been on a lot of these rides as they do as an older person. Anyways, the first stage was 200 kilometers and 12,000 feet of climbing.
I can't even comprehend what that means. Like that's like how much
you can't. And I ride. Okay. So 12,000 feet. I'll give you some comprehension. I ride a lot. And for me, a max day, like endless training and like work. And granted, I'm 58, is a 6,000 foot, like an epic, hardest day that I've ever been on, ever in my life, is 6,000 feet of climbing and about 40 miles. Because, you're grinding up, so you're not doing a lot of miles. They are doing so their first day of the tour was double the amount of climbing I've ever done. Okay, of 21 days. And they'd covered 130 miles. So this is why that is the best event. Let them drug, let them do whatever.
Let them do drugs.
Just survival.
Like just screw it. Just let them do drugs.
They are doing. Well, here's the thing. They're doing it. Like they're not doing drugs to be 600 pounds and to be linemen. Everything that they're doing is on the inside for some reason, right? It's obviously about recovery, muscle recovery, and their butt. And getting their muscles to recover from doing that for 21 days. And obviously it's about boosting their heart rate and yada, yada, yada. But they all look the same. It's not like you go in and all of a sudden there's a guy that's 240 doing these rides. They all have to be between 140, 160 pounds, I think. Maybe Lance was a little heavier. So it's fascinating. Like even on a car, it's just some people, when they go do some of these things, they go do some of the rides that I've done, and they say Tom rode it in a car once, one of my rides. He goes, I don't understand. So hats off. I think it's the best event in the world that these guys, it's, the most interesting. And I urge anybody that's somewhat interested in what goes on to watch a Netflix show. Okay. Let's get right into, we've got Michael here. We're going to talk about tech, but let's get right into the market here. You had a great call on Tesla, JC. Let's go right into what's happening. Me and Mike were like a little bit skeptical. JC's for about 3 weeks. You've had this Tesla trade on, and today it's really jihading. It started out as a put selling trade, but it has now just become a really good bounce.
Listen, it's one of those situations where, it happens where you like a stock, but there's also a very well-defined level that you could sell puts against. So you could either use that level as a stop, you could sell puts against it, you could do both like we did, right? Like it doesn't always happen that way, but in this case it did. You had a very clear level, 165, you sell those puts all day. And I remember asking, because there are certain stocks that you just don't sell naked puts on. Like it's just not worth the risk. And I remember asking the fellas, you know, Sean, Straza, Alfonso, be like, is Tesla in the category of don't sell puts, you know? And we all agreed that it was not, right? Like Elon could be as crazy as he is, but it was not on the list of don't sell puts. So we sold the puts. Obviously that worked out very well. I think I hit our profit target like in a couple of days. That was just a luck of time. But at the end of the day, I think it's a top-down perspective that I think really helps with this one and helped initiate those longs, because if we're in a bull market, consumer discretionary has been underperforming for so long, right? It's just been a complete disaster for quite some time now. Amazon hasn't done anything for 4 years, et cetera, et cetera. So if this is a bull market, you're going to get rotation into consumer discretionaries. Discretionaries aren't just going to complete a massive top and start to crash. So if you want to buy weakness in bull markets, that's where buy the fucking dip comes from, right? Like that's what this is buy consumer discretionary. Okay, great. Now, does it make sense to buy consumer discretionary? Well, 25% of the index is Amazon, and it's breaking out of a 4-year base. So what's the second largest component? It's Tesla. 15% of the entire discretionary index is Tesla. So using that top-down perspective of rotation, and then Tesla just happens to also provide a very well-defined out, very key support that is either going to hold or it's going to not. The weight of the evidence suggests that it's going to hold. You buy the stock, you sell the puts, right? And it's a ripper. Now, okay, that already happened, obviously. So now what? Here's now what. In these sorts of situations, you're getting a massive unwind. And what ends up happening is that you don't just revert to the mean, you revert beyond the mean, and therefore getting back to those former all-time highs, I don't want to say is a done deal, but in my opinion, I think is a very high likelihood that we get back to those all-time highs. And if we do, there's a huge chance that we break right out of that and head to 1,000. Because I think everybody's forgetting, because it's been long enough. The stock went from 30 billion in market cap to almost 1.3 trillion in a couple of years. So the fact that it's consolidated and digested those gains for a few years, very well deserved. But this is a big deal, and I think it's taken long enough for people to forget that.
It was just a good call. I have nothing to add there. I mean, you defined the risk. That's why I wanted to revisit it. Let's get into the market here, JC. We usually end with this, but let's just get right into it, you, me, and Mike, because Mike's
yeah, and Mike, I want to hear your perspective on all this, and we can circle back to this whole discretionary trade, because that's what this is, right? Tesla is the second largest component. So here's Amazon. Right? So Amazon's breaking out to all-time highs. It's 25%, 24% of the entire consumer discretionary index. You could see it breaking out of this massive base. We are now exceeding the prior cycle's highs. So now the largest component in one of the most important sectors in the United States, arguably the entire world, consumer discretionary, is breaking out of a 4-year base to new all-time highs. So now this is near and dear to Howard's heart, because you and I have spoken about these companies for years. There are Amazons in other countries, right, Howard? You've got Mercado Libre which is Argentinian, that's all Latin America. You've got Junmaya, which is in Africa. You've got like Alibaba in China. You've got Kaspi in Kazakhstan. C Limited, SE, like that is like all traders know C Limited, right? I mean, these are all the Amazons of the various countries.
I actually own that, but I would say PDD is the new Alibaba. Again, not that I'm a China expert. Yeah. But much harder because of currency and other things to own these. Amazon is still the way to play this, but that's a good list. Yeah. Are they doing well? I own a little Coupang, but it hasn't really done anything.
Well, if you scroll down, I brought in a chart of Coupang because it's actually doing better than C Limited, right? So C Limited is back to those former highs from 2022 and stuck below it. C Limited is also below its anchored VWAP from its all-time highs. Coupang is above both of those. So Coupang is above all that resistance from 22, and it's above the anchored VWAP from the all-time high. So the average participant is now making money. And by definition, in uptrends, those who own it are being rewarded, right? In uptrends and bull markets, the people that own those things are being rewarded, right? We know that. So if we reverse engineer it, we want to be looking for stocks where the owners are being rewarded. Coupang is now one of those. Not all of these Amazons of other countries are like that. If you scroll up, Mercado Libre, that's, one of the more popular ones, obviously. Such a huge company. Linson talks about it all the time.
Did you take that public, Mike, at Goldman? Mike, did you take that public at Goldman? Mercado Libre? I know Fred Wilson was the original investor back in fucking the 90s.
Yeah.
I don't think, JC, you knew that.
Yeah.
You didn't do that IPO?
We were involved in that, but I don't think we took that one out. I'd have to go back.
That's some history, man. That was like a 1998 probably IPO, 99.
I like the Kazakhstan one, Howard. The one from Kazakhstan. Throw that one up.
I couldn't find it on a map.
This is Kaspi.
Where
Throw up Kaspi. So that's the one that I like. Big base. This is a new issue. I challenge Riley to go look at the data on StockTwits. I imagine it's going to be very little. A lot of that has to do, obviously, because it's in Kazakhstan, but also because this is a new issue. This thing just went public a few months ago. So if we can get above those highs and we can stick that landing, that's a huge base, relative strength. And it's not just like the Amazon. It's like a Kazakhstani fintech.
Never heard of it, but congrats on finding that. The other side of the Amazon trade is Nike, Lulu, which you got bearish on Lulu a few months back, but Nike, Lulu, Starbucks, because they're consumer too. And I think it has a lot to do with Amazon, because when you go to Amazon, you see Nike products next to Onan products, next to whatever brand. And I think you're really starting to see the effects, where for a while, Amazon was supposed to destroy Procter & Gamble, but really what it's destroying is the actual more upscale consumer brands. Procter & Gamble's doing as well as ever because supermarkets haven't gone away. And it seems like the brands like Nike are the ones and Lulu that are suffering because your products get shown next to other products. And with Lulu, it's Vuori, Aloe, and 1,000 other brands. They could be the ones being affected,
So here's a long-term chart of Lulu. I thought you'd appreciate this one, Howard. One of Howard's favorite books, right? Shoe Dog. Howard loves Shoe Dog. I read Shoe Dog because Howard told me to. It's a good book.
The book could be great and the stock can be shit. Like there was a period where I think he wrote that as kind of a Bible for the team, not to get too political, and kind of gave them a roadmap of what the brand stood for. But maybe tech is just coming for the law of large numbers. I'm not sure. It's still a $100 billion company selling shoes. So I don't know, Mike, any thoughts there as it relates to Amazon and the consumer goods?
Yeah, on the consumer good, the one thing I'll just highlight on a bottom up fundamentals point of view on Amazon, the thing that caught my eye this week was Amazon is looking like it's going to borrow big time a couple of pages from both Temu and Shein. Since we're talking about Asian and Chinese consumer retail, etc., they're going to take advantage of that $800 loophole from a shipping point of view that Temu and Shein basically, cracked a big dent into the Targets and the Kohl's and the Walmarts in the U.S. My sister, probably she by own admission, anecdotally, spends as much on Temu and Shein as she used to on any of the stores where she would have to go in. So Amazon's going after that, and that's an important element because they're going to try and build this value shopping tier for mainstream shoppers in the U.S. They're seeing that they're having their lunch eaten a little bit by the Asian Chinese retail companies, and they're going to react to that. So that's
so you're saying American women are using Chinese apps, and it's cheaper for them to order those things in the U.S.?
In the last 2 years, this has been a fundamental. I can send you research on this because the analysts are different on the sell side and the buy side. Internet for things like Temu and Shein and so on. And then the retail analysts are looking at this from a bricks and mortar target goals. The dots have not yet been connected, but I've done a lot of work looking at the cross-fertilization. Yes, Temu and Shein have made huge inroads, very meaningful, mainstream, real inroads, where tens of millions of American shoppers, a lot of women, are shopping on those sites. Those companies have figured out how to use machine learning dramatically to reverse engineer manufacturing. So if people like your red sweatshirt, they can quickly figure out that people are looking at it, just like TikTok, etc., and then reverse order 100,000, 200,000 orders directly from factories in China and then ship them under $800. There's a big loophole, and Congress, of course, is looking at it, because it gives Chinese companies an advantage. But for the last few years, this has been, if it can be shipped directly to you under $800, there's meaningful tax savings. So for instance, my sister is finding that she's getting 40, 50, 60, 70% off on a lot of things. Just daily. It used to be clothing, and now it's everything between Temu and Shein. So it's a big chunk of consumer consumption in the United States. And under our radar, the Chinese companies have absolutely been making, just like TikTok took a huge chunk of our attention, Temu and Shein have taken a huge chunk of our consumer mainstream spend. And
that Amazon has to be affecting Nike. So but at the same time, JC, it's not like the consumer is at Walmart, Costco, Amazon, pretty much all-time high.
Dick's Sporting Goods, new all-time highs, absolutely crushing it. A bunch of insider buying in Dick's Sporting Goods up here. You don't see that. As somebody who literally, we do the insider filing data, we aggregate it better than anybody on the planet. I'm telling you right now, we don't see that. I mean, what the hell does this guy know?
Deckers has been a home run too.
Yeah.
So it's selective. I think it's another huge blunder by the U.S. where China has we can't play by the same rules in China, right? Like we're seeing it play out in Europe, Mike. Like Europe is now anti-U.S. It's not the right way to be. Like Europe's going to hurt its own consumers by blocking Google and the GDPR or whatever you call it. It's a nightmare as someone running StockTwits to see what GDPR has done.
And I have a whole topic on that. I had a whole thing to talk about later on the regulatory front in terms of between what's going on in Europe and then some of the things that are going on in the US. These are big political regulatory headwinds. In the US, it's all the antitrust stuff against all the big tech fighting yesterday's wars. In Europe, it's literally going after Apple and Microsoft and Meta, yesterday. And literally, depends on the company. Apple, for instance, I think it's less than 8% of their revenues. I mean, if Apple decided tomorrow that, hey guys, we're just not going to play in Europe, it's not going to be that much of a hit for them. I mean, generally speaking, it's not a good thing. I'm a big believer in globalization and equal markets, because that's how everyone benefits. The tide lifts all boats. But for a whole bunch of political reasons, this is what's going on in terms of Europe literally getting ahead of their skis, I think, in terms of trying to protect their users. And you already see it. Apple, played a little bit of the heavy, stick card, saying, hey, we may not bring Apple Intelligence on our devices to Europe. It actually doesn't hurt that much, but it's a signal saying, hey, we won't bring our latest toys to you because you're, making it difficult, actually impossible to actually deliver the benefits of that technology to your users because the way you're mandating the rules, if you go into the weeds of it. And so the broad picture of this is that I've been worried over the last couple of years that the internet was, and AI, internet, everything was getting balkanized into two big chunks, China and the rest of the world. Now, over the next 2 years, I'm now starting to get worried about three balkanizations. China having their own, top to bottom tech stack. They're making their own chips, etc. And their own wood. Europe which is being left behind if they continue on this trend. And there are separate rules, separate products and services from Apple and Meta and Microsoft and Google and everybody. They're not necessarily going to get all the benefits of all the latest things from these companies, which are the fountain of this innovation right now, because it's all, we're in a mainframe AI cycle. It's the big companies have the ability to deliver massive amounts of compute-driven AI services, and it doesn't exist in Europe right now. So that's a risk for them. So three balkanizations. So that's a second point. And then the coming back to the consumer discretion, which was what JC and you guys are talking about. Again, this $800 loophole was not built for or against the Chinese. It was just a thing there for a long time. And the Chinese entrepreneurs are amongst the most amazing entrepreneurs on a bottom-up basis that we've seen in the last 15, 20 years. They if you just look at how they compete against each other in the world, they find a way. That's why I came up with this Jurassic Park. They've always found a way. And so, yes, I loved it that Amazon is now reacting to the Temu Shein loophole. And I mean, their advantage, not that it's not their loophole, but it's that they're going to take advantage of their ability to source things around the world, use the reverse engineering sourcing ecosystem that Temu and Shein have built, and deliver huge amounts of value to their core U.S. market. And that's a plus.
So it's a proof that even at these big sizes, where everybody said, America, these companies are too big, they're being forced to innovate. Amazon,
they are innovating.
The stock was. Yeah.
When I watch these companies this time versus how I used to watch them in my professional capacity when it was the internet and PC, these companies have the opportunity to innovate across probably 5 or 10 times the industries that they did in the past, and they're doing it. Our last call, I talked about how Amazon invested billions into One Medical to deliver medical services. All of these companies have built huge amounts of media streaming infrastructure, Apple TV Plus, Amazon Prime, etc. I mean, these companies are innovating, and my only thing is, my only 2 cents to the companies and the boards would be, forget about the regulators. Yes, you have to deal with the regulators, but one jujitsu move possible for the big tech companies in the next 3 years is to self-spin out, do controlled carve-outs of their core properties, make them, keep 30-40% of them, spin out 40-50%. AWS could be spun out, Oracle Cloud could be spun out, half of it. And investors in this market, where investors around the world are hungry for growth and hungry to invest, you will have a stock to track. Just like, JC put up Kaspi from Kazakhstan, a $26 billion entity.
By the way, pays a 6% dividend yield.
But what's their, so Mike, we've talked about this forever. What's their incentive? Because everybody said they should spin off. So this goes to so many discussions, Mike, that you bring up, because
Correct.
this goes to the breadth discussion. If Apple Watch is like you said last time, is a Fortune 100 company, but what's the incentive for Apple to finally do this?
Because that company,
the incentives is what's going to drive this.
That spun out company can now go ahead and offer a lot of additional integration services to everybody else. One of the magic elements of AWS was, if you look at back over the last 20 years for Amazon, Jeff Bezos said, hey, we're going to need all this compute to build all our services for e-commerce. Why don't we sell some of it? And that's what, AWS went and ran with. And guess what? It's become a huge business in its own right, biggest cloud provider out there. Why? Because AWS was not just providing services to Amazon, which if it was only allowed to sell to Amazon, it would have been a far smaller business. But, they expanded into a TAM that was extraordinarily bigger. And we could find the same thing for, if Apple spun out Apple Watch, or Google spun out Google Cloud, the commercial part of it, as an example.
What's in it?
Cool thing,
so So maybe what's in it then is that Elon kind of showed the way, even though he didn't do it for the same reasons that Apple should do it or Google should do it by running 6 companies. Maybe Tim Cook could still be GM or CEO of 6 different Apple companies, but have their own separate management teams. And is that a way? So is the government indirectly going to create this by not allowing acquisitions? So maybe what drives this is the fact that if Amazon can't make an acquisition as Amazon one company, if Amazon split into 6 companies, they could become an acquisition machine. So I think that goes to people finding a way, Jurassic Park and that could be a hidden unlock in a bull run here. The question is, that may be the only way to get IPOs is to not break up these companies, which everybody was trying to do, but Apple, Google break themselves up for growth. So it could be, and they could be following Elon's model where, listen, he's got SpaceX, which is a $200 billion private company. You can make fun of him all you want, but he actually has proved it out. He's got
Mike, I got a question.
He's got Tesla.
Can you school us a little bit on the spinoffs? You have a little more experience than me in terms of being a market participant, particularly on that side of the business. I remember early in my career, there were a lot more spinoff situations, and there were a lot more stories about spinoffs. I could think of like the 3Com and Palm situation was like a shit show.
Correct.
One of my all-time favorites. Can you share some color on the lack of spinoffs is what it seems like these days versus what it was back in the day?
Yeah. So spinoffs. You're totally right, JC. They've been around for a long time as a market instrument, etc. In my 20 years, I spent a lot of time. We helped Barnes and Noble build BarnesandNoble.com and figure that out, and then spun it out as a separate thing and so on. Company. So spinoffs have been there for as long as stock markets have been there. What's different this time is that we have 4 or 5 major U.S. companies that are each over $1 trillion. And, it's like what you guys were talking about, law of large numbers. The market will buy these things and put them in indexes and so on. And they will look at 1 or 2 of the businesses of those companies, but the number 3, 4, 5, 6 companies that sub units of those companies have opportunities that are each maybe $1 trillion on their own right, but they won't get there because there is not enough buy-side attention, information, analysis, the ability for those companies to compete for a broader piece of that market because they're not captive in that thing. All of that stuff comes to play. In other words, the history of spinoffs teaches us that at scale, these things can be even more powerful than it's ever been. But we've never had the opportunity to try it because we never had $1 trillion companies. We never had companies with 5 to 10 businesses within the same company that was as big. Yes, in the 60s we used to have conglomerates, Gulf and Western and so on. There was a whole conglomerate, Teledyne.
Hold on. What are some of the examples like AWS or YouTube, like stuff like that?
No, but I think what the other thing that we're missing here, and I'll go right back to Mike, is because of indexing, it wouldn't be like they'd have to market 5 different companies. So if Amazon woke up tomorrow and said, we're 5 companies, they'd all still be held. It wouldn't change the share structure because, yes, there'd be different eyes on them, but all 5 of those Amazon companies would already be in your Vanguard S&P 500 fund.
Correct.
So it wouldn't change. It wouldn't be like they're taking a hit in shareholder base.
Correct. No, and Amazon could still own 30, 40, 50%. They could have incentives of the thing. They could still have the control. They can have their cake and eat it too. Those are structuring things. That's what investment bank, that's what the kind of thing I used to help with, as a partner in Goldman Sachs. I mean, but it's just that now we would think about it in a bigger scale. We're talking about 8 and 9 digit numbers on the companies. So Google, YouTube, as an example, an obvious one I'm just going to throw out. Amazon, it's Amazon Prime. I mean, Amazon Prime by itself is a Costco. I mean, just think about it. Just think about Costco. Look at Costco against, Walmart, etc. You look at the same thing with Microsoft in terms of their enterprise business and their and their Azure cloud business, which has been the big driver. I'm not saying everyone should be doing it, but we are at a point where the regulatory headwinds from Europe, from the China issue, from the US are suppressing the natural opportunities for growth of a lot of the businesses within these companies. And one of these days, the light is going to go off, both on the company side and the investor side, that this kind of makes sense. Somebody will try it.
What's holding them back?
Somebody will try it.
I would say this is being priced in as we speak. If you look at like Piper Sandler stock or any of the investment bank stocks like Goldman Sachs, remember we talked about why I'm long Goldman, Gold, Google. Well, maybe underlying this is happening, Mike. I mean, you're probably not caught, but maybe this is being priced into the fact that if this happens, Goldman's going to crush it, because who else could manage this process but Goldman? And the stock's already at all-time highs. If Amazon announced this tomorrow, Goldman would go up 10, 15%, because this is endless banking money for the next 3 years, multiplied by 100 companies. Which reminds me, we'll end with India, because India is probably the fourth. It's not just Europe. With respect to public markets, it's not just Europe, China. Europe's going the other way, but Europe, these Europe, China, US. I think on the free-spirited way, it's India, right? Like they're benefiting from all the quagmire everywhere else because they have a big enough market on their own, and they're so young in terms of growth and opportunity. And so while everybody's bickering, India is just continuing to rock.
And by the way, India had a very, the people don't think about it in the context of the market side, but as a general optimist, the elections in India, which was one of the other big elections this year, 1.4 billion people are going to, and the Modi government not getting as much of the parliamentary vote as they thought, and with the opposition getting more of a play, is a good thing for foreign investors, foreign capital, etc. Because it puts a little bit of the brakes for the government to do some of the populist things, etc., that they want to do on the minority side of the equation, and it improves the environment for Apple, for Amazon, for Google, for any U.S. company, not just tech, to invest more aggressively in India. And India is it. I mean, it is the one country with the biggest demographic dividend in terms of, they've got a surplus, 30-40% of young people who are looking for jobs, who are looking for opportunities, and they need to see capital come in with confidence beyond the small group of crony capitalist companies in India who take most of that opportunity. And so I'm getting a little bit more optimistic on India, but it's early. The elections just happened. But yes, I agree with you on the India piece.
So it's very early, but JC, let's go to it. Like I've noticed, let's throw it up. We'll end
India
with
is one of my favorite places in the entire world. Mumbai has been such a special place for me. So I try not to let that impact my, market stuff, right? You know what I mean? Like I love Japan too, but it doesn't mean, right? So I try to kind of keep these two things separate. But I mean, listen, it's hard to fight this. I mean, look at the Nifty 50 and Nifty 500 just in June. I mean, as somebody who looks at as many candlesticks as I do every day for so many years, to see what the Nifty 50 and Nifty 500 did in the month of June, they knocked them down early. I know the election, something had to do with that, but either way, regardless of the reason, the reversal that we've seen to go out at new all-time highs, going out at the highs for the month, very, very impressive in India. And I brought together, and by the way, India's market cap, total market cap of all the stocks in the country are approaching Japan. So not too far away from exceeding Japan in total value. I don't want to say that's a guarantee, but I mean, I'm willing to bet that India is a larger stock market than Japan very soon. India over,
which makes sense. So I will share a quote, a data. They've had more than one IPO a year. So how many days? There's been 100. There's been 200 days this year, and they've done close to 220 IPOs. I don't know what the IPO is in the US, but it ain't It ain't 200 IPOs.
No, it's
in
a
the
lot
US. Probably
less.
20. It's probably 20.
And these are small market caps, but there are big companies. Michael was talking about them before that trade here in the United States. Like, let's go over a few. First of all, here's ICICI Bank, which is a name we talk about all the time. Of course, my fundamental friends, Michael, I'd love for you to speak on this. My fundamental friends, and you could go to the Bank Nifty, which is next. That's the financials index in India, Bank Nifty, and also making new all-time highs. From my fundamental friends, they tell me that the Indian banks are the ones that trade at the highest multiples. These are the most expensive banks in the world. I guess for good reason. You get what you pay for, huh, Michael?
India is, we talk about the underbanked market in the US. India is massively underbanked. They're leapfrogging, their payment structure has leapfrogged what we've done. They've emulated what's happened in China. And Indian banks have also had a little bit of a disadvantage over the last 10, 15 years, is that because labor was so cheap, they were slower, both the public sector, state banks, and the private banks, in automation. And that is changing around rapidly over the last 2 or 3, 4 years. So yes, they have an opportunity. I mean, we went through automated tellers and all of that efficiency curve in banks in the US, 30, 40 years ago. The Indian banks are just starting to see some of that oomph as well. So they're coming on fast in terms of the innovation of technology and services and leveraging technology, and all of that is ahead of them. So that would be my 2 cents.
Just for
on
perspective,
the
perspective, look at that chart
Yeah.
and look at that peak in the great financial crisis there in 2007. And look where the financials index in India, the Bank Nifty, is now. It is up sixfold?
Yes. So the
Sixfold.
US is just getting back to all-time highs, and they're up sixfold. It's kind of like relative strength, baby. The question is, for the average, I'm not saying it's early or late. I think it's early at some stuff, and maybe this stuff's just too expensive. It's risky, but that's what relative strength is, right? Like for young people listening, your investing career is going to be very long. Like Mike and I and you, JC. These type of things are going to happen over the course of the next 30 years, no matter what the government does, no matter what it may not happen in the US, it may not happen in Europe, but this is going to happen somewhere. That's the beautiful thing that Web 2 and Robinhood's, Coinbase, all this shit brought along, was the fact that you have the ability to go look here. So relative strength played a huge role here. Goldman Sachs is just hitting all-time highs.
The U.S. financials index
hit in 2007
just broke out above, those former great financial crisis highs. So let's go over a few Indian companies because, for a lot of investors, they might not know how easy it is to, buy things in India. First of all,
well, I brought up Make My Trip at 40. That was an idea that I shared because relative strength wise, it was the first Indian stock to me. Yeah. So you can see it hasn't looked back since I brought it up at 40. It's a double. I think the company's still very small. Still very small company. And if you think about the U.S. airport traffic is at an all-time high. Does that mean you can go buy Delta Airlines or Southwest? No. I mean, go do your own work.
No, the Indian airline market is very, very, very robust. A lot of competition. There's been ups and downs, just like a lot of airlines, private airlines got out. Same thing happened in India. But air travel is crazy booming. I was just there a month or 2 ago. Mainstream people are flying like everywhere. And the government is spending massive amounts on airports around the country, not just top tier, but second and third, fourth tier airports. So I would.
So what you do here, people, is you do some homework. And I haven't done it for you today, but Riley has. But there's probably 3 or 4 budding Make My Trips in the travel space that are breaking out, show relative strength, yada, yada, yada. Booking.com in the US looks better than most travel stocks, but it's got the law of large numbers behind, on its, which is more of a problem, right? How big can you get versus Make My Trip, which has the whole world to expand into, and it's just a $10 billion company.
And then go to the healthcare stock.
You can see where relative strength.
Go to the healthcare stock because it's a similar situation, similar size company, Dr. Reddy's. This is RDY's, a drug manufacturer, about $12 billion, showing relative strength, like you said, Howard, but not like overextended. This is building a really nice
It's an Indian company?
I'm sorry?
This is an Indian company?
Yeah, this is a drug
an Indian
manufacturer in
company?
India. $12 billion market cap. Trades right here in the United States. Dr. Reddy's.
What do they make? Do they got a penis pill? Do they have a fat pill? Because if they get a fat pill,
You can ask. I don't know. It's a drug manufacturer. That's above my
gotta
pay
go
grade.
do
I
some
see
work.
mine go
Yeah,
up.
India in general is with one of the biggest generic pharmaceutical industries providing the world. So it's a big opportunity, and regulatory wise in the US, we've not had the opportunity to avail ourselves of drugs, pharmaceuticals from places like India. That has been opening up a little bit. It started via Canada and so on, but that is opening up. Mark Cuban, if you look at his cost plus model, etc., they're trying to take advantage of manufacturers from overseas and build that into the system.
Well, I just bought a few shares of Ready because that's wow, that is a great looking base, JC.
India, man. I mean, listen, you want to go where the relative strength is. This is Linzon. This is Linzon, like, to its most extreme.
That's a Linzon stock.
Like relative strength country.
Yeah.
Relative strength stock, right? Like making new highs, under follow.
Relative strength sector too.
Yeah, sure.
No, what I like about this is that these are also trade, you said, JC, in the US, right? So these are, you're not buying on the look.
No, these are ADRs. These are big. This is $12 billion. Yeah, it's big.
Right.
Yeah. So interesting idea there. But yeah, India looks to be, and then, throw in degenerates. There's not a bigger nation of degenerates, even though it's small numbers. If you look at Robinhood, Coinbase, crypto, India loves, this, JC, because that's why you went there. They love trading. They love speculation. So you're talking about a times 10 degenerate market opportunity there, which I don't know who's the big benefactor of that yet, but I know in the private markets that there's 20 Robinhoods that have been funded in India. So I do know that. I've avoided that market. Alpaca is kind of our play there, and I see it from our investment in Alpaca, the stakes are very high in both the Arab countries and in India for winning brokerage and for winning wallets. The wallet sizes are smaller. They're less distributed. It's a very has not, much like the Arab economies. But the stakes are very high for some winners there in the degenerate economy. And that goes to, probably they've already had gambling around their sport. I'm having a brain fart, not rugby.
No, one of the biggest hits in India from a sports, talking about the degenerate economy, has been the cricket side, obviously.
Cricket, sorry. Cricket.
It's, I think, the third or fourth largest market for private teams outside the NFL, NBA. India is the big innovator in the last 10 years. A lot of celebrities and the billionaires, etc. It just like team ownership has been a big thing in the US and in Europe, etc. It has become a relatively big thing in India. And cricket is other than soccer, those are the two big sports around the world.
By the way, I went to the cricket batting cages, like the equivalent of the cricket batting cages. Dude, I was hacking away, right? I thought I was the man. And then they start throwing the spinners because you could change who the pitcher is. And it's not called the pitcher, it's the bowler, right? So he's and then once they start doing the spinners, which is like the curveball of cricket, this is impossible because it bounces. It's not like a baseball. It bounces. Dude, shit is impossible.
No.
So mad respect to these cricket guys.
No. And by the way, speaking of India cricket, it's the US Indian American entrepreneurs are trying to bring it here. Satya Nadella and Sundar and all these other folks. There's a big effort to build cricket in the US as well.
They played a bunch in Queens.
Just like soccer.
In Queens, a lot of Indian guys out there playing.
All right, so we've covered a lot of like what is going right, actually, even though the headlines, as I keep saying over the last year, headlines will get worse. So we've got headlines getting worse, opinions getting dumber, the presidency getting dumber, the common knowledge game that we know, Biden, we all know what everybody knew. Yet the markets go up, Amazon's fighting off China and thinking big. The incentives may be for companies to break up, which will be bullish. The banks are benefiting. India, Make My Trip, RDY, Tesla. We've covered a lot of But underneath is what should we be worried about would be a quick, I'll leave that, I want to end with this because it's like we've been pretty bullish for good reasons and we've been right. More so that you than me, JC. I'm generally cautious, but like optimistic. What are we missing based on what we've seen?
I want to hear
start
what
with you,
Michael
Mike.
has to
And
say,
then
but I just think very simply, what most people think is the most important thing doesn't necessarily mean that the market thinks that that's the most important things. The market is factoring in so many different circumstances and events and evolutions all over the world in real time. So what somebody on their couch watching the news might think in their head, wow, this is the most important thing in the world right now, and the market doesn't care. It's not that it doesn't care. It's that there's a lot of other things that the market cares about. In most cases, it cares a hell of a lot more than what you think is the most important thing going on in the whole world right now. So I just want to remind everybody that it's what the market thinks, not what we think, or Howard, or Michael, or the TV or the radio. Like, the market's going to do what it wants to do, so we can either listen to the market or not.
No, I agree. And then I just say, since Howard, you brought up the common knowledge Ben Hunt post on, and if people haven't seen it, you should go to Howard's site and read that. That's a great piece. I've been a huge follower of that, of Ben, and just then the case he makes that when the emperor has no clothes, and at a certain point people understand it, etc. And it's a very, very strong piece. The one thing I would add to it from an AI perspective, and I may write up something around these lines, is when you think about what AI does, which is suck in data of everything and then summarize it probabilistically wise. It's the AI in the next 2 or 3 years is the new raised base of common knowledge for the universe. That we are going to summarize the truth, and it's not as gameable as traditional computer-based social media has been gameable. Why? Because it gets sucked into today a handful of big LLMs. In 2 years, it's going to be hundreds of LLMs, and in 3 to 4 years, it's going to be thousands and millions of LLMs. So it's not gameable. It's far less gameable than news is today. And so the common knowledge for the people to figure out what the truth is, whether it's about a president or about a specific Nike shoe, whatever it is, the common knowledge of that is going to be much more available than ever before. There's a very famous quote, and I've written a post about this. Isaac Newton, when he got the big award, he for astronomy, he basically said, if I have seen Father, is because I've stood on the shoulders of giants. Otsog, O-T-S-O-G. And the reason I'm bringing it up is for humanity, for 2,000-3,000 years, we've built on the knowledge of other people to become better, to invent things, etc. Common knowledge that Ben Hunt talks about is Otsog at a massive 100x, 1000x basis. And so so that's another reason I come away more optimistic, despite all the bad news and the bad feeling about where we are going in the next 5 to 10 years on a bottom-up basis than I ever have been for 30 years. Yes, there are a lot of things to worry about, a lot of things to pull our hair out about, but that common knowledge piece, OTSOG, is a very, very key piece. And I can underline that I've written about a lot about it. We can talk about it separately.
I love that. It's a new term for me, so it's a new favorite term, OTSOG. The thing that we're trying to teach younger people here, and for my kids or the people that really love this show, is that you could get negative as you want. India doesn't give a fuck, right? Like, you want to play the Europe game and drown yourself in misery and bad policy, go invest in Europe. Your money is free, right? Like, our earned income is free to travel and find pockets of strength and relative strength. And I'm just mystified that people can't find more people like this. It's easy to take common knowledge and get depressed and go, fuck, we're just living in a world of con. Like, I call it peak grifting, right? If you go into this assuming grift is everywhere, you're going to be a better investor, right? Because it's never been easier to grift. Therefore, you can drown yourself. But now it's never been easier to do it, because you could do it at a global scale.
Easier, It's
you can
easier,
create
but-
supply off a phone. You can create supply. You don't have to go mine something to create Grift. You can just
exactly. If you
create
want
it on your phone.
If you want to feel good about grifters and so on, go. I did it again. I will watch this. The Music Man. Go watch The Music Man. It's the con man grift.
That's an old. You're going old school there.
I'm
Mike.
going old school. I'm going old school. But I'm just saying, look, glass always full is my motto. And so look for the upside on this thing. Yes, I loved your phrase, a few days ago about grifter fatigue. Grift has always been there. It's just that we now, as individuals, as countries, we have tools to see through the grift. And at some point, the common knowledge, the otsog, seeing on the shoulders of giants and grunts, the way I wrote about it, I'll send it around. It is the thing that allows us to fundamentally move ahead of the grift a little bit faster if we collectively think about it. And that's why, JC, you're showing the India chart. So look, markets, as you're right, markets are going to find a way. Markets are going to find the way. That was the
smart money will find a way. Dumb money will find bags. They'll go to the mall and find bags, but smart money will just not listen and get caught up in the bullshit. I will say, in The Music Man, just how old I am, I was the lead in a Can't Play in The Music Man. I have to go look up the character. So JC does not know. JC does not know what I'm talking about.
We have to have a clip.
There was no cameras. There was no camera back then. There was just some mosquitoes watching, And by the way, I had a beautiful voice until my bar mitzvah, when my voice changed. All right, so we've covered a lot of ground, gentlemen. We missed Phil, but fuck Phil. Where is he? He's on vacation, JC?
You think he's down in Costa Rica or something? I don't even know. He's doing his thing. God bless him. Good for him.
He's getting some sun.
He told me yesterday.
He's got older kids though. I got infants. I can't go anywhere. So he's taking, if I were him, I'd be doing the same thing.
You're a slave to this show. Michael has no kids, so he's a slave to this show. Next week I will be doing it, but I'll be at Wimbledon, post-Wimbledon quarterfinals. Wow. So I'll report on that first time ever. And then I'll be at the finish line the following week at the Tour de France. So hopefully we'll have some friends.
Amazing.
So gentlemen, a great show.
Wonderful to see you guys.
Yeah, wonderful to see you. Thanks for putting this together. We'll see everybody next week.
Thanks, Kiki. Thank you.